What is up, traders? What's up, tycoons? Super excited for today's video. Now, there is actually something that I've been talking to a lot of people in my coaching sessions that they don't realize about the Boyle ETF, and that is stock splits. Okay. And we're actually going to take a look at the split history. It's something really, really shocking and revealing if you're not, familiar with this. Okay. So we're going to cover that in today's video. We're also going to take a look at the growth of $10,000 without dividends reinvested in Boyle over the past 10 years. Then we're going to go over the natural gas spot price and take a look at the RSI and MACD signals. Okay, these are something that I go over a lot in these videos. We're going to break down, those signals, how to use them. Okay, and then we're actually going to dive into the futures chart, look at the overall macro scheme of the monthly chart. All right, and then we're going to take a look and zoom in at the 4-hour chart on the futures, break down what it is I'm seeing and what it is I'm looking at on those. If you're looking to trade UNG or Boyle, even cold, you absolutely have to pay attention to the futures and the spot price. Okay, it's just that simple. If you're not paying attention to those, all right, you're going to have a tough time actually figuring out, what the prices are for UNG and Boyle. Okay. Now we'll also take a look at the Boyle daily chart as well. Okay. And go over, the signals that we explain on the natural gas spot price chart and how you can use those to potentially trade Boyle and also UNG. They work on both of those. Okay, so we're going to break that down in today's video. Make sure to smash that like button, subscribe to the channel if you guys are new. I'm dropping natural gas videos every single week, so this is going to be a really great place for you guys if you're interested in natural gas content. Before we move any further, of course, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. And let's go over this with Boyle. Okay, so Boyle actually has done a few stock splits in the past. Okay, and they're actually reverse stock splits. So if you take a look here, all right, what's really interesting about the split history is, look, we did one in May of 2012 and then May of 2015. So that's a 3-year time period, okay? Look at the last time that we did a stock split on Boyle. It was April of 2020. So now we're at the end of May 2023. And it's been 3 years, and that's the longest time period since they've been doing stock splits that Boyle has gone without a stock split, okay? And reverse stock split, remember. Okay, so if you take a look here, the next one was in March of 2018, so roughly another 3-year period. And then they did one in April of 2020. That was about 2 years. Okay. And now, again, we're at the longest time period that Boyle has gone without doing a stock split. Now, its most recent split was the largest one, a 1-to-10 reverse stock split. So that essentially means, that if you have, 10 stocks of Boyle, okay, it ends up turning into 1 stock of Boyle, right? And they do that for a certain reason. Okay. I'll actually explain that reason here very soon. So when a company such as the natural gas ETF, conducts a reverse share split, it is usually because shares have fallen to a lower per share price point than the company would like. This can be important because, for example, certain types of mutual funds might have a limit governing which stocks they may buy based upon per share price. The $5 and $10 price points tend to be important in this regard. Stock exchanges also tend to look at per share price, setting a lower limit for listing eligibility. So when a company does a reverse stock split, it is looking mathematically at the market cap before and after the reverse stock split takes place and concluding that if the market cap remains stable, the reduced share count could result in a higher price per share. And so we're at this strange point right now where Boyle has been really fluctuating around $3 a share, a little bit above, a little bit below, for a while now. And you have to remember that, again, as we just went over it, there's lots of funds out there that aren't even allowed to buy stocks that are below $10 or below $5 even. So, that really takes a lot of, potential market cap out of the Boyle fund because it's below both $10 and $5. And, the longer that we remain under that $5 price point, you do have to realize that there is an increase, the odds increase more, the longer that we stay below that $5 price point. Now, I'm not predicting the future and saying that Boyle is about to do a reverse stock split, but rather just trying to, put some content out there and information that really, I don't think anybody else is putting out there. So, if you appreciate it, smash that like button, subscribe. We'll go into, if you take a look here, okay, Boyle to me is something you trade, all right? Whether it's, a longer trade or a shorter trade, that's up for you to decide what your time period is. But it's definitely not something that you would be long-term investing in, long-term speaking, years and years and years, right? If you take a look for, if you would have invested $10,000 10 years ago in May, all right, and you look at what that $10,000 would be right now, you would have $2.88 exactly right now. So, that's pretty rough, all right, to, handle. Okay. And so that's just some words of caution that I want to put out there. Okay. Because, I've had a lot of coaching sessions with people, and it's mostly Boyle that the people are underwater on, and, they're down 5, 6, even 7 figures sometimes. And, a lot of times they just didn't know some of these things going into this, beforehand. I do have long positions in natural gas. It's in the UNG shares is the ones that I have. But here recently on the really big rally, we'll take a look at the rally. I was able to share or sell most of my shares for a profit, and, a nice profit. And I have a small amount left currently at the moment. And I still have a very small amount of hedges to the downside through put option contracts. All right. So we'll take a look at the natural gas spot price here. And what we're going to be doing is going over divergences. And so divergences along the RSI, and combining that with the MACD to spot potential entries and exits. So a divergence is pretty easy to spot once you get the hang of it, and it's really not that hard too. Beginners can actually start to learn this. So as divergence simply occurs where right here, if you take a look, we're making these higher highs. But if you look at your RSI, remember, this is your relative strength index. So it's going to measure the relative strength of whatever you're looking at based on its current price. And we see price action making a higher high, and then the RSI making lower highs. In this case, that would be known as a bearish divergence. Now you combine that with the MACD. This is your moving average convergence divergence. Sounds really complicated. Mostly what traders use this for is to spot potential entry and exit signals. So in this case, when we see the red line crossing below this yellow line here, that's what's known as an exit signal. So just not even candlestick patterns, right? Just looking at pure price in the MACD and the RSI, we see we have bearish divergence here. That's one potential sell signal. And then we ultimately get the MACD crossover here. Now we have 2 potential sell signals, and we do see a sharp move to the downside afterwards. Now the exact opposite of that is going to be a bullish divergence with a MACD entry signal. So here we have a low and then a lower low, right? So price is clearly in a downtrend now, making lower lows. On the RSI, we see a low and then a higher low. So we're increasing in relative strength as price is going lower. That bullish divergence, we see the red line cross above the yellow line here on the MACD, and sure enough, we get a nice bounce to the upside. And that's remained relevant for a while, right? And it's been a pretty decent trading strategy. When you look at the natural gas spot price, okay, we can see higher highs, lower highs, MACD crossover, higher highs, lower highs, MACD crossover, right? Lower lows, higher lows, MACD crossover. And, they've been pretty relevant and, pretty efficient up until here recently, right? What we see is we've been building this bullish divergence for a very, very long time, right? If you take a look, initially we had the low, we had the lower low, we had the lower low right here, and then we had a low, higher low, and then we got a sharp move to the upside. But really, when you look at the longer time frame, natural gas has really just been stuck consolidating in here, and we've had this bullish divergence building for a very, very long time, right? If you take a look, we have this low and we have these series of lower lows here, and then we have a low, and we keep bouncing off of this relative strength index bullish divergence line here, but we haven't gotten a significant push to the upside. Right, we see little pops each time we bounce off of, we come to the bullish divergence trend line. We do get a small bounce, right? Over here, we get a small bounce. Over here, we get a small bounce, right? And we keep bouncing off of this bullish divergence trend line. But the thing is the more you test the trend line, the weaker it's going to get. And we've tested this bullish divergence trend line several times. And if we end up coming back down, the more we test it, the increased odds that we could end up breaking it. And if we break it, that's when we really could see a sharp plunge in the price of natural gas. Now, for now, it's been a good trading opportunity in, playing the bounces off of here. And, there's been plenty of times, short-term trades for you to go long and then take profit at your desired profit level, or set a stop loss in profit or at break even, different ways. So that way you make sure you're not really losing your money. You always want to have some type of a play, or, a plan rather, heading into a trade. That's something else that I've talked to in my coaching sessions. A lot of people necessarily didn't have a plan. They were buying it because maybe their friend was buying it and told them to buy it, or maybe they saw, prices were all the way up here, and then, prices are down here now. They thought it was a good deal, and, didn't really see any returns. So if you guys are interested, you can always email me, ZachlyTrades@gmail.com, for a coaching session. And I'll get back to you as soon as I can. This is the monthly chart right here. All right, we can take a look at our overall demand zone we have down here. Okay, and we can see many times in the past, even when we've come down and briefly touched it, this has been a very strong demand zone for the natural gas futures. Okay. And currently we have this supply zone over here that's really just been beating the crap out of us. Okay. We have not been able to really consolidate here and absorb the price action in here and really take out some of that supply. Okay. The reason they're called supply zones and demand zones is because these are areas of imbalance where there's either a supply imbalance or a demand imbalance. Those are simply just buy and sell orders. And so the supply zone just means that there's an imbalance of sell orders here, and it just keeps pushing price lower. If you can consolidate in there and absorb some of those orders, that's when you have a chance of creating a new imbalance, possibly to the upside. Now, let's go ahead and look at the 4-hour time frame right here. So this is the natural gas futures 4-hour time frame. And you may notice these blue boxes all over the chart, right? What are these? I'll explain these in just a brief moment. Okay, you can see we have one currently that's relevant to, price where we're at right now. And these are what's known as gaps. Okay, now gaps tend to fill about 90% of the time historically. And the big question is when they're going to fill, not so much if they're going to fill. There is that 10 to 15% chance that the gaps will never fill. Okay, but what I like to do is I like to draw up these gaps, set some alerts near those gaps for potential trading opportunities, or just so that I can know where price action may be drawn towards. Right, initially here we had this rising wedge pattern, and this is the same demand zones and supply zones from that larger monthly chart. You can see as soon as we came down into the demand zone, guys, we barely even touched it. Buyers quickly stepped in, right, and quickly stepped in, shot price higher. We ended up forming a rising wedge in here, and we got a very textbook breakdown retest of the trend line, and we came down and filled that gap. And ultimately we had the pattern play out, the rising wedge play out, and we came back down all the way to our demand zone. And yet again, once we came down into that demand zone, we quickly saw buyers step up. All right, there were 3 levels that we really needed to get above right here. That's what these yellow lines are. I'll explain those in just a moment. But I want to still focus on the gaps. And you can see, when we had this gap here, we came down and filled that gap. When we gapped up again over here, we ended up coming down and filling that gap. And most recently, we have a new gap down to fill. So, definitely be cautious, because there is a chance that price action is going to be drawn towards this gap down. And if that happens, you could see lower prices and things like UNG and BOIL. Now, there's also been bullish divergence here on the 4-hour chart for the futures. Right. If you take a look, we had a low, had a lower low, then we had a lower low, and we created higher lows on the RSI. And, this trend line has been bounced off of twice, 4 times, 5 times. Remember, the more times you test a level or a trend line, the weaker it's going to get. But it's been pretty strong for now. So we'll see if we do end up coming down and filling that gap. Can we bounce off of the bullish divergence trend line? If we end up breaking that, then, again, there's that chance of a sharp move to the downside you want to be cautious of. Now let's go over what these series of yellow lines are. What these are is our major Fibonacci retracement levels. Okay, so you use these because nothing moves in a straight line down, all right, and nothing moves in a straight line up. Rather, what you're going to get is you're going to get a move down, retracement, continuation lower, or a move up, retracement, continuation higher. So you can identify trend continuation using the fibs. You can also use it to spot reversals, right? So if you move down, retrace, and you start to consolidate and break through those retracement levels, that's how you can spot a potential upside reversal. And that's what we're looking for right now, to see if we can get that on, the natural gas futures, right? We have this swing high up here, we have this swing low, we have this aggressive move to the downside. And notice, we retrace, we consolidate a little bit, we retrace, we're consolidating now, and we're looking ultimately, we need to flip right here about 213.6 to support on the futures chart. Okay, you can see here we tried to flip it as support, right? We tried to break out, flip it to support, and then push higher, but ultimately we had a look above and fail, and we're coming back down in the range. Now we're still consolidating around those major levels. We're going to see if we can, break through there and head up higher on the natural gas futures. Now over here, these are actually going to be the support levels. Okay. So, this is the larger move down retracement levels. Okay. And then this is, the move up right here. So ultimately we need to hold above these levels right here to have any possibility of continuing that trend back up higher and potentially breaking through the downtrend and heading up higher. Right. And so those are going to be about 199 down to 184, right? If we move up there and break through these levels, then we have a strong chance of coming back down and retesting that demand zone again, as we've done multiple times in the past. Okay, so that's what I'm looking at when it comes to spot and the natural gas futures. All right. If we take a look at Boyle right here, the bullish divergence has been, nice times for potential trades, right? If we take a look, we have the lower lows are highlighted here in circles, right? We have a lower low right here. And then you see we had a 28% move to the upside in Boyle. All right, we're bouncing off of that bullish divergence trend line, 28% move. All right, and then you wait for it to create a new low, test that trend line again, and the risk to reward is just much better there, right? You can basically enter there and close your position if we break the bullish divergence trend line. All right, and start heading lower, then you can say, hey, well, that move failed, I was looking for a bounce, cut your losses quickly. Okay, and if you do get the bounce off of there, then you simply just set a stop loss somewhere, wherever, or take profit wherever you want. And you can see, the most recent time that we bounced off of the bullish divergence trend line, we had a 51% move. I actually took profits on my UNG right around this time in here, just because there was such a sharp move up. So why not take profits when there's profits, right? There's nothing wrong with ever taking profits, even if somebody makes more money than you. Remember, hedge funds will pay people millions, or people pay hedge funds millions and millions of dollars just to, basically get a 1% return every single month, right? That's 12% a year. That's really fantastic from a historical standpoint. Okay, so keep that in mind. All right, now 283 has been the big level to watch. Okay, as you can see on the last time on the daily chart, we did bounce off of that 283 level pretty strong. We're currently sitting at 292. All right, take a look here. We have a gap up to 367 to fill, right? We talked about the gaps on the 4-hour chart for the futures. And if you take a look at Boyle's daily chart, we do have a gap up to fill. We just have to ask ourselves the question, is price action being drawn towards here right now, or is it potentially going to keep heading lower, right? If we break 283, all right, really, my ultimate next support level, my big area that I'm watching is going to be 213. Okay, 213, I think, is where price action is going to be drawn towards. All right, we're pretty far away from there right now. From a percentage basis point, when you think about it, that's about 80 cents drop, and the fund is under $3 right now. But we may come over here and bounce right around this area in the 260s or 270s. That's our most recent low. That's the all-time low right now for Boyle. There is the chance that we could come down to that area, to that level. But really, 283 is that main level I'm watching right now. And ultimately, if we get a strong breakdown, 213 will be one of the areas I'm targeting. Now, to the upside, okay, not only do we have the gap at 367, but 320 is a major resistance level for us right now. Above there and above the gap to fill, we have 432 and $5.16. The next one we're going to look at here is going to be UNG. Okay. UNG also has been, bouncing pretty nicely off of the bullish divergence, right? Nice bounce over here, nice bounce over here, 17% almost, nice bounce over here, 26.8%. So, some nice bounces off of the bullish divergence on the RSI. If we take a look, we have a gap here to fill, okay, and we have another gap here to fill. I was really interested. This was a very strong rally. We got very close to filling this gap up here just above $8 on UNG, but ultimately we weren't able to fill it. If you notice, we are consolidating a lot right now and just ultimately moving sideways. We're really range bound in a lot of these natural gas funds. And when it comes to the major levels, okay, we have 667 is a overhead resistance right now, 715. Below there, we have 642 and 606 as support. We haven't even come down and tested 606. We got very close to it here recently, but ultimately buyers stepped in, bouncing off of that bullish divergence trend line. Okay, so that's going to be it for today's video. Smash that like button, subscribe to the channel if you guys are new. All right, if you guys want to help support the channel, you can email me, about a coaching session, or you can use the link in the pinned comment down below for Simply Wall Street. It's a really cool app, all right, and it's also a website, and you guys can learn a lot from there. And it basically covers fundamental analysis for you guys. If you're not an expert on fundamental analysis, what I would recommend doing, okay, if you're interested in natural gas, obviously watching this video, is use the platform Simply Wall Street to actually look up some natural gas stocks, right? Natural gas companies, rather than just UNG and Boyle. Okay, go ahead and look up, maybe some LNG stocks, all right, some LNG companies, maybe just some natural gas companies, different things like that, because there are other ways to invest in natural gas besides just UNG, Boyle, and coal, right?